Hello everyone and welcome to a new weekly market report on ATFX channel related with the whole view of the last week on the market. I'm going to share with you news, macroeconomic data, last events, global events, international events, geopolitical events. Last week was an important week. We got one of the most shocking inflation rates numbers we received for the last few months. It was US on Wednesday. Let me share with you the calendar, right? Because everything started here. The whole week, after 2 weeks falling the markets, after 2 weeks facing losses and with red numbers in the main markets in the world, we got since Wednesday a kind of party celebrating that based on these numbers, 3% inflation rate in US, there is no reasons to keep, or Federal Reserve has no reasons to keep the monetary policies restricting liquidity and increasing interest rates. Why? Because we are almost at the target of 2% inflation rate in US. The expectation was 3.1%. The numbers we got, it was 3%. Therefore, it was super good news, super good news. As you can see also, inventories or reserves of oil are dropping massively. We got in the screen the numbers published by US government on 12th of July. It's interesting also because it's related with the oil market. Oil market was rising like a rocket last week. We actually touched on Brent oil. We touched around $80 per barrel, which is super good numbers also. There is two factors facing this. Mainly, this is something we commented on the previous week, but we can see that right now there is a kind of battle between US and those countries who produce oil, which is Russia, Saudi Arabia, Libya, and Algeria are also joining that battle to increase, better to say, to decrease the production and therefore the offer of oil internationally, and then increase the value of or the price of the oil. The second factor is considering the inflation rate published by US on Wednesday. As you will see now here, dollar index was dropping massively. We see how dollar index was losing the main levels on 100 points and is below 100 points. And this means that if the dollar is getting weaker and weaker, since then, commodity market need to adjust by increasing the prices. Because obviously those countries who doesn't produce dollars and sell mainly on the trade balance oil need to increase the value of the oil to compensate the loss of value of those dollars they receive by the commodity, right? So this drop on the price of the dollar, this drop on dollar index is the main reason or one of the reasons that is contributing to the rise of oil. Let me share with you the screen. In terms of oil market, you got it here. You see how nice it is? It was just even about $80. It was $81.50, the prices we faced last week, and just pulling back to the $80. But very interesting movement. And in the line, like, just let's make a kind of short reflection about this, what we're seeing right now. Last week, the main topic, it was the low inflation rate registry in US. I also shared on my social networks, let me share with you the charts and the numbers. I also shared on my social networks what was exactly the composition of the inflation rates, because the main reason why that inflation is dropping is because energy prices are dropping. Not just energy prices, but also food and another underlying assets. One of the most nice charts I shared with you last week, it was this one. As you can see here, commodity prices are dropping massively compared with the inflation on services, which is stable. And therefore, if the only reason why inflation rate is dropping is because the commodities and mainly energy are dropping, it means that then if the oil is rising, we may be gonna face between the long to short terms, we're gonna face an increase on the inflation again if the oil is rising back again. Because like we mentioned in the previous reports, the most inflation asset is oil. Oil is affecting all assets, all services. We got another example here. I think this one is coming from the BlackRock report, but you can see that the mainly drop on the inflation is caused by the decrease or the reduction on the prices on energy and food, but still services on blue in the screen are stable, are almost flat. They're reducing but so slow. That's why the report published here by IMF on Reuters, it was telling us, just reminding us that one of the main concerns that IMF it got is like if the inflation is still sticky by prices of the services, which is, by the way, stable or rising because of the reactivation of the global economy after COVID. We are considering that now in 2023 is the first year that the whole planet are rising all restrictions related with pandemic and COVID, and therefore the expectations calls on China as the new awake call for get the economy back on track is not as we expected. IMF is doing in this report, giving to us a few details. I just take a few notes just to share with you more or less what's the main concerns they got it. But mainly they are concerned about low manufactured production in G20, in the main 20 biggest economies in the world. They also are concerned about the weaknesses of the global trade in general terms, frictions, geopolitical frictions and tensions between the Ukraine. They actually consider in the report what could happen. So how could this affect to the rest of the market or global economy if the Ukrainian conflict escalate to a war situation with NATO and Russia can be in a direct conflict. They also say that the services demand are rising because of this lack of restrictions on the economy caused by the pandemic, the previous pandemic. They say that because of this, the inflation is still stable on services, and probably in long term that inflation is gonna still be there. They also say that central bankers need to keep fighting against inflation. And they say, so far as the interest rates are, as far as the inflation is above 2%, interest rates need to be above the neutral interest rate. What is the neutral interest rate? What is the neutral rate for the interest rate? The neutral one is the ones that is keeping the balance on capital markets, the one that is not reducing the liquidity, the one is just keeping stable as a reference and so on. We will say in this case it's difficult to say which one it is because they don't know. They keep just basically keep the interest on 5%, even rise the interest by 5.5% or 6% annually. Has a reference interest rate in US. It's probably one of the interest rates that is actually reducing the inflation, trying to keep the liquidity dry and make the markets on the prices mainly do not keep rising. So so far they say probably monetary policies in G20 need to keep pointing on reduce the inflation by keeping high interest rates. Something that China, by the way, is not doing anymore. We also heard that Popular Bank of China has announced, like in June we got the reduce of 10 basic points of the interest rate as a reference. They also increased the liquidity on the internal banking system by reducing the core coefficient for the banks, and therefore the banks can increase the loans and the credit they give into the companies and so on. Authorities in China also suggest to the bank system to be more flexible with real estate sector. All credits related with real estate investments should get more access to credit or renegotiation or refunding of the loans they got it. They also say that central bankers and regulators should keep eyes on the financial industry and financial sector, and particularly also in the real estate, which is exactly what China has been doing a few days ago. So they are in the same line with the China in this sense. They suggest that fiscal policies, taxes should be more tough. That means that they're gonna increase taxes, mainly in Europe and US. Something we probably expected because the deficit that US and Europe are facing is massive. So the only solution they got for this kind of measures, or the only solution these guys got in mind, is just increase taxes, right? China should increase the contributions to the IMF. It sounds like kind of a request they're doing on the report, but I also mentioned that China should increase the contributions to the IMF. Just keep in mind that China is considered an emerging country. As an emerging country, the quotes and the contributions they're doing are lower than other countries. compared with US, with England, with France, are lower. And this is one of the points that Donald Trump mentioned years ago, that China is not an emerging country because it's the second biggest economy in the world, and therefore the second biggest economy in the world should not be considered as an emerging country with certain advantage or privilege on others, right? It also mentioned the distortion effects that subsidiary policies on US, Europe, and China are causing on the economy, pointing like China is doing on the industry, and it's a socialist country, so that is really, really common, in line with what could be expected from a socialist country. But in the case of Europe or US, it's also true that they increase in the regulation. They are just funding certain industries. Yes, in the case of Europe, the report is talking about green energies, green policies, all of these new trends that are actually deviating, destinating funds from public money to this kind of companies or sectors in the industry that can cause certain distortions. All right, that was in relation with the IMF report I was reading, related with what's the view of the economy. In terms of geopolitical, we got a few news last week that it was shocking. Tensions between Turkey and Swedish government to get access to the NATO organization. So Swedish government was trying to apply for be a member of NATO. The only opposition they were finding was the opposition of Turkey and the opposition of Hungary. Hungary government say if Turkey accept the president of Sweden on the NATO, we will vote for a yes. We will also accept that. The thing is, after the conference done in Austria by NATO, Turkey accept to get Sweden in the NATO organization, but only with certain concessions, only under certain circumstances. They say Swedish government need to share a roadmap with them and to be more compromised and with certain confidence that they're gonna be more serious in terms of the policies related with terrorism and so on. This is also related because Turkey believe that Swedish government are supporting certain groups, Turkish groups related with PKK, which is Kurdish groups that Turkey government consider like a terrorist. So the whole point of NATO was if Sweden will join or not to NATO, and the only opposition of Turkey say yes. But now we got a few kind of swift situations where either Turkey say, unfortunately, we say yes, but Parliament of Turkey need to approve this, and they are only back work on September, and they got a long list of laws to get approved and priorities. The answer from Swedish government, it was also like, well, unfortunately, they commit this compromise to extradite 2 Turkish citizens to Turkey, but the National Court from Sweden stopped this process, saying that there's technical things that not in the line with what is expected by law there, which is like it has to be recognized as a crime between both countries, Turkey and Swedish country, and it's not the case, blah, blah, blah. You can just take a look to the article and see in detail, but it's funny because this kind of little issues between one country and another are blocking actually the join of one country to the NATO. We also got another geopolitical event, which was that the Security Council of United Nations was called this last week just to discuss the topic. North Korea was shooting a new nuclear missile over the South Korea and between South Korea and Japan. It was thrown to the ocean. One missile, there was ballistic missile tested by North Korea. And again, South China Morning Post was mentioned here, the issue. And it was also mentioned that in part, this is an answer that North Korea government is giving by the fact that the United States is moving certain nuclear submarines on the coast of South Korea. And they consider that a provocation. So therefore, it's another focus, another point of conflict. We got Ukraine, we got Taiwan, and we got now North Korea. Moving forward, also, interesting article I found, it was this one related with how Aramco, one of the biggest oil companies in the world, was actually accessing to 40,000 millions of funds, investment funds, for their subsidiary companies. related with BlackRock and through an index done by JP Morgan, when it was supposed to be an index for ECG, sustainable energies, and so on. And an oil company was accessing to 40,000 millions. I recommend this article if you want to go into detail and see how exactly they did it, but they explain how they access to 40,000 millions. It was published by Bloomberg originally, and you can find for free on Yahoo News. Okay. Another very interesting news, it was this one. In August, we got the meeting of BRICS on South Africa. One of the rumors that is mentioned now in some medias, especially on BRICS countries, is the fact that they could be planning to throw or to launch a new currency, supranational or international currency backed by gold. It said last week the Russian embassy in Kenya declared the BRICS countries are planning to introduce a new trading currency which will be backed by gold. It's shocking. It's something that many people are expecting for many years. Not this from BRICS, but in general. I could remind you, like I think it was HR 5404 law project in US introduced by Republicans to move the US economy to a new gold pattern. Okay, research that, but this is amazing. It was even considered at some point in this article from FX Street was mentioned that could be an escalation of the provocations if BRICS launch this kind of currency. US could consider this a kind of escalation on the provocation. So it means like they find this a kind of hostilities, right? Literally says implicit in her appeal to China is that any move on the part of Chinese to ditch the US dollar and conduct trade in alternative gold-based currency will be viewed as an escalation of hostilities. That was quoting Treasury Secretary Janet Yellen and the trip that she got to Beijing days ago. Very interesting topic. You can also research on more detail that. China was organizing also a kind of event here. China invites global investors for a rare meeting, has economy sputters. So this whole thing is another event that China is organizing to invite mainly investment funds, financial firms, big investment banks. One of the assistants to the conference or to the events is going to be the director of the financial regulator in China, which is the CSRC. They was just to attract new investors by probably announce new stimulus or flexibility for those who decide to invest in funds or in the industry in China. Very interesting topic. That's all. And in terms of charts and market, we got over here the movement done by SP 500. I mean, by the close of the Friday, almost there. We are ending just the Friday, so just to see how the week was closing. Really well. All seems like the SP 500 are gonna close the week with prices quoting over 4,500 points. Super important level because we didn't see that level since the monetary policies start to increase interest rates in 2022. So therefore, this is a new scenario, let's say. For many of those who follow the market, this could be the first step for a new bullish market. The 1 million question is if something could ruin this new trend, right? Like I'm just suggesting here, like I mentioned at the beginning of this video, we got many other factors that can actually trigger the inflation back again, or even the numbers from labor force in US. The labor market is still super strong, and therefore is a good reason for the monetary policies and the bankers to keep interest rates hard, to even rise, as they mentioned, they could rise twice already this year, still twice, 25 basic points, so almost half percent. The interest rates. And therefore, if that happens, we will see that all this discount the market is doing, all of this celebration, all of this party could be over, right? That was in relation with the American market. We also got here NASDAQ rising super nicely also. We got German market here, DAX, etc. Is the only one he's not reacting in that way. I mean, we see that it was recovering many old levels. 2 weeks ago, we closed in those levels below 16,000 points. Now it's 16,100 points. But if you take a look, futures in Europe are the only ones who are not closing positive compared with the American market, which is in really good, strong position. But European markets are not showing the same levels. In the case of Spanish index, it's just decreasing from almost 9,600 points. So a week ago, basically 2 weeks ago, we are actually now at 9,428 points and dropping from there. Okay, we got also the Bitcoin, super strong, as you can see, doing really, really well. It's acting actually like a kind of a safe haven right now, because we can see that some of the markets are not moving or doing the best, like European market right now, but Bitcoin is still strong, keeping it strong. Dollar is dropping, as I mentioned before, and I saw you in the chart. Is for the first time in the last few years, is losing the 100 points, and everything looks like it's gonna keep in the same line. Euro dollar, therefore, and because of this, is rising strongly too. Probably moving to a new targets of $1.15 per euro. That's probably the next target. As you can see, it's a just little stop here on the area of 112.50, but probably the main goal is at some point reach or touch 114.50 euro dollar. We also need to check gold and oil. Gold, we detect this pattern last week and it is amazing. Look, the move, we reached the targets and now it's just making a lateral movement in the area of 1,960, 1,950 dollars per ounce. In terms of oil, I saw you already, but this is the movement, super nice, almost $82 per barrel last week, in the area of $80 per barrel the close of the week. Okay, I think that's all. Please leave me in comments if you want to review any specific market in particular, or if you want I launch live trading, for example, to analyze markets based on your request with any one of you following on the chat and requesting on the chat markets or questions related with macroeconomics. Okay, that's all for me, and hopefully see you next week. Okay, take care. Bye-bye.